guys, what's happening and welcome back to our channel. Cryptocurrency operates in a way similar to PayPal or a credit card, except that instead of dollars, you trade digital assets for products and services. To perform a cryptocurrency transaction, you must exchange money with a peer using a cryptocurrency wallet, which is a digital wallet. Bitcoin, Dogecoin, Ethereum, and Cardano are a few names you must have heard getting tossed around in reference to cryptocurrency. However, if you're not new to the world of cryptocurrency, you're already well aware of this. Keep watching if you want to learn about the 5 mistakes that every crypto trader should avoid. Number 1. Blocking profits. Okay, this is a tricky task to do because it goes against human nature, but when a coin starts going up and up, we all get greedy and think, oh, we're going to get Lambos, we're going to become millionaires, when instead the rational thing to do is to start locking in some profits every now and then. Because as they go up really high, they can also go down really fast, and if you retain it all the way up and all the way down, then what's the point of it ever rising in the first place? So I'm not saying get rid of it and sell your currency all at the same time, but keep selling a small percentage after every pre-decided time period has passed. Simply invest the earnings in another coin you've been eyeing and you'll have a win-win situation, right? Number 2, ignoring the concept of dollar cost averaging. Limit your risk so you don't have to do anything like play a guessing game when making purchases. You could just as easily use dollar cost averaging to attempt to minimize some of your risk. Wondering what's dollar cost averaging? Well, it simply involves purchasing a little amount of cryptocurrency over time and then averaging your buy-in price. It's a fancy word, but it's a really simple concept. So suppose if you want to invest $1,000 in cryptocurrency, a dead simple way to do it is to divide it by 4 and then buy into the market 4 different times, so you basically take $250 and buy the same cryptocurrency 4 different times. Whether it's once a day, once a week, once a month, etc., and that really helps. Let's assume you purchased like 250 here at the top of 284, 110, and then you bought like 150 here at the bottom at 213. So you basically add up all of these numbers and divide it by 4 to get an average buy-in price. If you did that over time, you'd end up with an average buy-in price of 180, which is a lot better than buying in with everything at 280 right now, and that's one of the simplest ways to avoid buying high and selling low. Number 3, buying and selling too much when it comes to the stock market. Unless you plan on day trading and making profits on all of your trades, the buy and hold method will generally save you big time taxes in most situations. If you find yourself buying and selling too quickly, beware that taxes can eat up your crypto profits in the blink of an eye. So let's say you invested $100 and it rises to $30 to $130. But sell your investment at $130, so you now have a profit of $30. When you pay capital gains on this short-term capital, this amounts to around $20 plus a couple of more dollars for transactions. Therefore, your $30 turn into $22. This is just one trade, so imagine what happens if you do a few of these. One way of reducing your tax fee a little is by getting off an expensive exchange like Coinbase and using a cheaper KuCoin sort of app. This one is around 1/10 of the price and helps you do other interesting things as well. Still struggling to grab the concept? Check out the math. Number 4, excessive risk taking. Taking on too much risk when investing in crypto is a huge no-no because it leads you to make suboptimal decisions that go against your initial strategy. Essentially, when you're taking on too much risk in the crypto market, you tend to make emotional decisions due to the high stakes involved, so it's critical that you have a risk management strategy. This will of course depend on what investing strategy you have. That is, always set stop losses for transactions you're doing, since the crypto markets change quicker than you can respond to them. Top tip: never add to a bad transaction again. This is emotion-driven investing, which is equivalent to gambling. You're just chasing losses, and your approach is built on hope rather than logic. And for the love of Dogecoin, please try to avoid high leverage, especially if you're a beginner. I know that leverage trading is often portrayed as a magical way for you to grow your money, but the reality is that you don't know what you're doing. You're much more likely to be liquidated from these over leverage trades. If you absolutely must use leverage, you can look into leverage tokens. These essentially provide you upside leverage while restricting your downside exposure to the token's cost, which is risk management at best. Number 5. Not storing crypto offline. If you're an active trader, but what if you're looking for a long-term gain? Then there's a lot more you need to be wary of. Are there any mistakes that long-term holders make that cost them a lot of money? The most common one is not buying something to keep your crypto offline. If you're trying to hold crypto for the long haul, we strongly advise you keep it offline and away from exchanges. Yes, you may have found a good exchange with a good track record, but you can never promise the security of your funds on an exchange. The exchange could get hacked. Some of these potential risks include corrupted hard drives and keyloggers, or even losing your laptop, which is why most prefer to store cryptocurrency in a hardware wallet. Hardware wallets are devices that are stored in extreme cold and are not connected to the internet. All key signing is done on the device, and your encryption keys never leave the device, making them impossible to hack. If you're looking for a list of the best hardware wallets, all you have to do is Google and multiple compiled lists will pop up. Well, that's all we have for you guys today. Tune in to learn more about cryptocurrency only on our channel.